Good afternoon and welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Samantha Loring and my co-host Mark Ashton, editor of Finweek. Well, on the show today, we'll take a look at the craft beer industry and the number of opportunities that it now presents. We'll ask also whether the South African property market is currently a buyer's market. That's in our personal finance section. And then PPS recently completed a survey looking at the state of the LLB qualification in the country. We'll take a deeper look at that in our management section. And then we'll also take a look at some nifty online tools for entrepreneurs. You can send us your comments or feedback to moneymatters@abn360.com. You can also find some of us on Twitter, so please do contact us via that. Well, there's quite a revolution taking place in South Africa at the moment, and it involves South Africa's favorite beverage, beer. But unlike the big name commercial brands, this revolution captures the spirit of entrepreneurship and celebrates creative spirit. In the cover story this week, Finweek looked at the craft beer industry and the number of opportunities that it now presents themselves. Finweek Company's editor Garth Tennyson joins us to take a look at that. We'll also be speaking to Brendan Watchman from Copper Lake Breweries and Jason Cedarwell, founder of Craft Liquor Merchants. Welcome to you all. I suppose a nice topic as we edge into the weekend. So why did you decide to go with this as your cover story?
Go on, beer. I mean, come on. There's nothing better than beer at the moment. I mean, I think it's coming into summer. I think that it's one of those things that's just, it's a South African thing. We love our beer. And I think that, you know, we looked at it a couple of months back, so we'd noticed a little trend happening in South Africa, specifically Joburg and Cape Town, where you're having these little craft beer festivals popping up, and they were on everybody's radar. And Garth, I think he maybe took the mickey out of it a little bit because he's managed to wheedle his way into his own little wine route or craft beer route around the country. But he went out there and he actually looked at the state of craft beer in South Africa. And I think what was really interesting about this particular story was it actually captures the spirit of entrepreneurship. I think, you know, often you see all the big corporates replicating brand after brand. There's nothing unique about them. There's no real celebration of creativity, entrepreneurial spirit. And I think, you know, we're blamed that we don't actually generate the entrepreneurial interest in initiatives like this. Yeah. And I think craft brewing, just looking at Garth's story, he's managed to unpack something that really cool that's happening around South Africa at the moment.
It's an interesting trend worldwide, and you pointed out the fact that in the States last year, beer volumes dipped by 1.3% and the craft beer industry grew by 13%. Is that the same case in South Africa?
Well, it's difficult to get figures in South Africa because the industry is quite fragmented. And in the US, they have a very organized Brewers Association, which has very accurate and reliable stats on the various forms of beer, craft beer versus, let's call it mass-produced beer. To give you an idea, in South Africa, I approached SAB Miller and I said to them, what do you think is the total volume being produced by craft brewers annually? And they gave me a figure of 1.3 million to 1.8 million litres, which is literally a drop in the ocean for them. But I did a sort of back of the envelope calculation based on some of the volumes I was given by a lot of the guys that we spoke to. And I estimate that it's probably closer to 3 million litres. So the point is, it's very hard to tell exactly what is going on in the craft brewing industry and drill down into the detail. But one thing I can tell you is everyone we spoke to just spoke about growth. There's an appetite out there for new, organic, handmade beer, if I can put it that way.
Yeah, we talk about artisanal beer market in South Africa. Of course, it's trendy. It seemingly started in Cape Town, the trendsetters of South Africa, many say. Brendan, welcome to the show. Tell us a little bit about Copper Lake. And is this about passion or is it about profits?
Well, our brewery started about 8 months ago, and we've been going from strength to strength. There's a huge demand at the moment. It is a very trendy product to have. Don't be fooled into thinking that it's an easy undertaking. It's capital intensive and it's a hell of a lot of hard work, but it is also a lot of fun. And the best part about being a brewer is if you come home sober, your wife thinks you haven't been working.
Well, I suppose that is an issue probably for some. But when we're talking about distribution, there's some are saying SAB is a good thing for the market. They dominate the market, 90% of the local markets. What are your views on that?
Well, if you look at SAB, I mean, their beer is available in every little corner, in every tiny little town in this country, and that's a mammoth undertaking. Logistics is Probably the biggest thing, even it's more difficult than actually making a good beer, is to get it out there and get it available to people. Marketing as well. We go solely through social media at the moment, and we've got quite a big following of people on our Facebook site, which is working well for us. And at this stage, it's growing because there is very little competition at the moment.
Yeah. And Jason, of course, that's where your business comes in.
Absolutely.
You saw an opportunity, you spent a bit of time in Cape Town, you were doing your friends a favour by bringing some of the beers to Joburg, and then of course a business boom.
Yes. So I mean, that's pretty much exactly how it started. I mean, it was literally, I stumbled upon it by chance. It started off as a hobby, which is pretty much still that. You know, and just spending time down in Cape Town where this kind of this micro brewing, you know, beer movement was, I was just absolutely drawn to it. You know, you started off by saying, you know, it's our passionate drink, and you know, there's a story behind it. And I think that, you know, for me, this entire industry is built on passion, and that's exactly what it is. You know, what Brendan's doing, what we are doing. We're not at that scale now where it's kind of making sense for us right now, but it's those who kind of get in now, and that's exactly what we've done. You know, being able to bring beer to the market. Again, what the likes of Brendan and that are doing, it's just so rewarding to see the growth that we're seeing and the growth that Brendan and them are seeing. As it's kind of started off at just a single market in Johannesburg, it's now, you know, in restaurants, it's in bars, and we're literally just going from strength to strength.
When it comes to the outlook, what is the sense you got from the breweries you spoke to? I mean, are they looking to increase their capacity?
Virtually everyone we spoke to is either in the process of expanding their microbrewery, or they have plans to do so. And the word that, you know, on everyone's lips is explosion. It's about to explode. In the US and apparently in Australia, craft brewing is huge, and there's a huge following amongst consumers who go out there looking for specific craft beers and want to try new beers all the time. And just to touch on what Mark said, yes, South Africans love beer. But I was speaking to Steve Gilroy, who runs the Gilroy Brew Pub in Mulder's Drift, and he said to me, South Africans don't have a beer culture. We have a light lager culture. And I think that pretty much summed it up. Yeah. Yes, we like beer, but we like to drink the same beer all the time. And we have this sort of parochial mentality of, I will drink what my father drank, or I will drink what the guys at university drank. And again, you know, I spoke to the Triggerfish brewer, and he says, why is it like that? You don't have people who only drink Zonneblum, Sauvignon Blanc and nothing else. They'll try different wines all the time. Why should it be any different for beer?
Very quickly, you know, we've got so little time, but what are your views on the outlook for the industry?
No, they're extremely positive, and just to reinforce what he said, when we built our brewery, we spent extra time and extra money in making quite a large capacity, because I went to every one of the microbrewers at the time and asked them the same question, and all the answers were the same, and their biggest problem was that they couldn't produce enough beer, which is a fantastic problem to have, and I think this industry is going to do very well.
Absolutely.
Yeah. I mean, distribution-wise, that's really where you play, and
Exactly.
you see a huge opportunity there.
Absolutely, and it's, you know, it's really going to go from strength to strength. You know, we started off on a very small scale. Within literally a couple of months, we've literally quadrupled that scale. So I think, you know, the word explosion is a pretty good way to put it. I think the next 2 years, this landscape is going to be completely different. We're still about 10 years behind the US. So, you know, we're still kind of scratching the surface, but yeah.
And it tastes good. It
Yes.
it definitely does taste good. So you are paying for quality there. Of course, you can see more on this story in the Finweek magazine. Of course, the cover story of this week, Brendan Watchman from Copperleg Breweries. Thanks so much for joining us, and Jason Cedarwell, founder of Craft Liquor Merchants. Time now to take a look at our Finweek Trade of the Week. Well, this week's Trade of the Week, Pellinghurst Resources. So why did this catch your eye?
Well, I think there's a lot of debate in the industry at the moment. So basically, Pellinghurst Resources is the old Brian Gilbertson investment holding company. I say old; it's been there a couple of years, but he's been essentially putting this business together. And I think that it's got a lot of interest because there's some interesting resource assets in. There's Fabergé, there's Platinum Interest, which they've just done a big deal with the IDC. And the concern has always been, well, can he repeat what he's done with other business. Has Ken Brian Gilbertson repeat with Pallinghurst what he's done with previous businesses. And interesting thing about Pallinghurst, I think it trades about R2 a share at the moment, and the net asset value, depending on how you calculate, somewhere around about 4. So essentially buying it for R2 and selling it for R4, or you should be able to sell it for R4. So I mean, there's a disconnect there. The thing with net asset value, unfortunately, is that it's a nice number, but can anybody ever realise these things? So I think, look, it's been sold down quite significantly. There was a rights issue recently, big exposure to platinum. We've seen what's happening in the platinum sector at the moment. So I think there will be a narrowing of that net asset value as the assets mature. I think $2 for $4, it sounds like a pretty reasonable trade.
Well, there we go. Buying opportunity, Pallinghurst Resources for value investors. That was Garth Tennyson. Thanks so much. He'll be joining us still after the break. We'll take a look at the property sector. Time now to pay the bills. We'll be back straight after this. Well, welcome back. Now, property still remains an asset class in that South Africans are most passionate about, and typically their largest investment that they will make. Now, record low interest rates should be driving demand for property, but this is still being offset by cautious South African households and high unemployment in the country. The question South Africans should be asking, should I be a buyer right now, or should I settle for what I have? I'm still joined by Garth Tennyson from Finweek, and we've got John Luce, F&B Household and Property Sector Strategist, and Rita Scooter, Regional Executive of Pam Golding Properties, to help us answer this question. I suppose the issue, Mark, is really if it's cheap, should I buy it?
Correct, and I think that's one thing that's been quite interesting. I was just driving around Randburg over the weekend. We've been looking at property for a while now, and it's been very interesting to see the disconnect between what people are asking for their properties and what they're ultimately accepting. And there's some quite cool tools that you can look at online, and it's quite interesting to find trends that are there, that people are saying, I'm asking 1.4, but I'm happy to entertain from say 1.1, and it's quite a significant decrease if you believe that your assets are tied up in the properties, in your property. It's quite a big drop from what you're expecting and what you're ultimately prepared to take. And I just driving around the neighbourhood, I get the sense there's more and more property coming onto the market, particularly in the larger freestanding properties. And I'm curious to know, is it a buyer's market out there? Why we've got the low interest rates? There's probably a possibility of another interest rate cut in the first quarter of next year. Is there an opportunity here for savvy buyers?
And of course, what you need to consider, John, when we talk about more properties coming onto the market, is that the case right now?
Well, I think compared to perhaps a year ago or so, it seems to be that there's a better supply. I think sellers also have a bit of a cycle, and not all sellers are desperate to sell. Those who want to downscale for life stage, for instance, they'll bide their time, and when they perceive the market to be a little bit stronger, they might try their luck and put their house on the market. And I think from earlier this year, it seemed to be the case that the supply got a little bit better.
So are you also seeing that, Rita, from your side?
I would say that we're going to the opposite of it, to say that we're looking at stock shortages, certainly in some areas, but that also is a demand. So certain areas, certain price brackets, obviously there's far more buyers interested in buying those properties. So in that sort of market, you'd look at a shortage of stock. But then also, the reality of it is, if you're going to go to the market and you're overpricing your property, you are not going to realize a sale. It's going to take a long time. It's going to stay on the market. And unfortunately, it also happens that if you are going to go through that process of overpricing, you are ultimately going to get less than what you would if you go to the market at a reasonably priced, market-related price. You will achieve much better.
But you talk about various regions or sectors within the property space that is doing very well, and you are seeing strong demand coming through. So break it down for us.
I would say below 5 million is where the market is at the moment, but then strong demand between 1 and 2 million, and then a sectional title market, obviously, which takes you below the 1 million. strong demand. So there we're realizing very good prices. So in that instance, if you come in as a buyer, you're going to have to come very close to what is on offer or what the property is offering on price. But we're also seeing, and which is very positive, is that for the first time we are seeing multiple offers coming through. So the buyers are coming to properties, especially new properties coming onto the market. If it's a good proposition, we're seeing more people offering on the same property.
I mean, low interest rates is really the key that you're talking about here, and that you do have that access to finance, which is very cheap. What are your thoughts on kind of the environment in which the property sector is right now?
Well, I think, as you say, interest rates are low, and it's attractive certainly, but you've got to bear in mind that interest rates at some point will turn in the other direction. I think the advantage of buying now, particularly if you're buying your primary residence and you're looking to stay there long term, is that prices are depressed. So you're going to get a 20-year mortgage at a lower price, whereas if you wait a couple of years and the market picks up, you're going to be paying off a larger principal amount over that 20 years. So that's the advantage. On the other hand, I think people are also to some extent, repairing their balance sheets. A lot of people went a little bit wild in the good times. And also people are not that certain of their jobs. If you're not sure if you're going to have a job in a year's time, or if you might face retrenchments, you might be a lot more cautious, with taking on huge debt for a long time.
John, I mean, maybe a question for you. I mean, are prices genuinely depressed? It's very difficult. It feels anecdotal that it should be depressed if you look at the consumer environment, but it doesn't. Just a flip through the paper doesn't seem to suggest the prices are.
No, I think it's still an overvalued market. What I mean by that is that I think over the next number of years there will be significant real house price decline. The market overshot in the boom. For various reasons, speculative pressures being one, but buyer panic being another. That's when buyers start fearing that if they don't get into the market now, they're not going to be able to afford it. So you have these overshoots. Real house prices peaked in early 2008. They've declined in real terms, for the listeners, is when you don't necessarily have nominal declines. We have had 1 or 2 periods of nominal decline, but you have lengthy periods where price inflation is lower than CPI inflation and wage inflation, and that's how a lot of the correction takes place. It takes place like that because you need the inflation illusion. A lot of sellers don't understand inflation. They don't want to drop their nominal price. They stick to their price. And over time, if they just stick to their price in real terms, therefore it declines. Now, these cycles, typically the typical property cycle, 15 to 20 years in length. The big cycle, the super cycle, last bottom point being 1998. And I think we've got some years to go till the bottom of the next one. So more real price decline, driven by high levels of indebtedness, a miserable global economy teetering along at not much and causing our economy to be mediocre as well. That doesn't drive job creation. And then big adjustments to costs related to housing as well. I'm talking about the electricity and the municipal rates and tariffs, especially on the larger sized segments. So there are some big adjustments, big financial adjustments that the household sector has to undergo. It is under pressure, and I think that's going to bring down the real price of houses significantly in the next few years.
If I can just ask one question, don't you think that now is a good time to be a buyer, at least from the point of view that it's easier to try and negotiate a better price with a seller who might be a bit sticky in not wanting to lower his selling price, but it's easier to negotiate at a time when the economy is under pressure and you're not facing that much competition from other buyers?
Well, I think it's a significantly better time to buy than what it was in early 2008 or late 2007. That we know now was a big mistake, probably. So yes, it's improved, but I think that the buying opportunity will get better. Okay. I suspect now it's difficult to know when interest rates are going to peak next time around, but I believe that the next time the interest rate hiking cycle peaks, that may be the time when real house prices bottom out more or less. And so in a few years...
So when you're talking about the years that we're going to have real price declines in houses, how long is that? I mean, can you put...
Look, it's difficult to put an exact date to things. That's always the problem with any market, is timing the bottom of a cycle. But I suspect it's going to be somewhere well into the second half of this decade.
So would you say, Risa, that the time is on buyers' sides right now, basically?
I wouldn't. I would buy. if I had to go out, and especially, I mean, if you look at the investment market, you're looking at the buy-to-let. We are certainly seeing a whole lot of investors coming back, looking at buying properties. At the moment, the demand for rental properties is just absolutely so big that we don't have enough supply. So we're looking at scenarios where previously we'd go to 0.5 return. It's now gone up to 0.7. In some instances, security estates even higher. So it depends on what your outlook is. It could be a scenario where you want to invest, and certainly if you look at what's happening at the moment, houses still obviously is safe as houses, so I would invest in that. And as a buyer, I agree that you certainly have a better negotiating power at the moment because there's uncertainty, sentiment, the market is not great. If you've got a seller, obviously that needs to relocate to a different town or has got different reasons to sell, you are going to be able to negotiate and you are going to do a good buy.
Talking about buy-to-let and also specifically in the sectional title space, don't you think there's an oversupply of 2-bedroom, 1 or 2 bathroom type units in Joburg? It just seems like everyone and their gym trainer has got an investment in that sort of thing. And I get the sense, just again anecdotally from people I know, that a lot of those guys are actually regretting that they bought properties like that a couple of years ago because one, they're facing tenants that are starting to default, they're coming under pressure themselves, and there's just this massive supply of that sort of unit.
Supply, we're not finding supply the problem. It might be a scenario where if you bought the property and you paid a lot for it and you've got a high bond, and certainly with the rates and taxes and all the expenses that comes along with that and defaulting tenants, it might put stress on the investment. But it certainly is also a scenario to go and maybe speak to a professional agent, get it properly vetted before you place your tenants and go through that process. But I certainly wouldn't sell any investment property because there's no demand.
So you don't think there's an oversupply of them?
Absolutely not.
I mean, I think that John touched on something, and in my social circle, this whole thing about the actual cost of maintaining and running a property, rates and taxes, is actually getting to the point where it's fundamentally affecting the decision of what. If you buy $1 million house and let's say your bond repayment's about 8,500 on that, I mean your rates and taxes are another 4,500 depending on where you are. I mean that's a hell of a chunk, you know, out of your cost. And I think that I mean, do you get the sense that that's actually impacting buyers' decisions at the moment? Because it's not just what you're paying now, it's double digit going forward for the next 3-4 years. It's water, electricity, and I mean the quality of service is still very, very average. I mean, do buyers, I mean, is that a concern for you guys?
No.
From your side, John?
I think it is there's a huge adjustment that has to be made. The housing stock, the composition of it is outdated. It's a 1970s style housing stock with low density, a lot of very spacious. It is densifying over time, but there's still many years of adjustment to a much higher density of living to adjust for, I think, big increases in transport costs in the years to come. I'm not sure these toll roads will come off, but in some form we've got to pay for that infrastructure, be it through a fuel levy or what. And of course, electricity has ratcheted up its cost, but we haven't really started with water and sewage and others yet. So I think there are big cost increases to come. That's the reality. We've got to fund infrastructure upgrades. And the housing stock, the mindset of South Africans was a sort of a spacious living one with the swimming pool, you know, the middle and upper income South Africans. And a lot of that stock is outdated. A far smaller percentage of people in future are going to be living that luxurious lifestyle that my generation grew up with.
Well, we're going to have to wrap it there, I'm sorry. But unfortunately, hopefully we also move towards more energy efficient houses as we move into the future. F&B Household and Property Sector Strategist John Luce, thanks for joining us. Rita Skitter, Regional Executive of Pam Golding Properties. And of course, thank you so much to Garth Tennyson from Finweek. Time for a short ad break. We'll be back with some top management tips straight after this. Stay tuned to CNBC Africa. Welcome back to Finweek Money Matters. Well, Financial Services Group, PPS, recently ran a survey of South African professionals and concerns they've raised about the quality of the LLB qualification here in South Africa. Now, with tertiary education under the spotlight, Finweek takes a look at what the problems with this qualification are and whether they are symptomatic of other professional degrees here in South Africa. We're joined by Finweek journalist Jessica Hubbard, John Marsden, National Sales Director at PPS, and Mtendo Mahungo, Deputy Head of the School of Law. Thank you so much for joining us. I think I'll start off with you, John. Just talk to us a little bit about the survey and why you felt it was important to delve into this specific qualification.
Well, Samantha, we as an organisation have over 200,000 graduate professionals as members of our organisation, and we embarked at the beginning of last year surveying them to find out what the sentiment was, generally speaking, amongst graduate professionals being influences within the society.